What's up, everyone? I hope you've all had a productive week. As we approach this weekend, there is so much we need to talk about as a whole lot is happening around us. To get us started, we have a tweet by Reuters, and it says, "Be ready to lose all your money in crypto, EU regulators warn." Before we explore any other updates today, let's hear what people in the crypto community think about all this. It's Noah shared a tweet saying, "I remember being on my computer and about to buy Bitcoin at $600, but didn't. I won't make that mistake twice. If there's one thing I'm sure about, many people have regrets when it comes to crypto. Someone always wishes they had bought a particular asset earlier when it was cheaper. Now, I'm sure you're wondering what is actually happening here. Hey guys, don't forget to join in our giveaway. It's coming up April the 1st. You can check out the details, the requirements. Well, they're listed right down there in the comment section below. We'll get into all the juicy details coming up shortly. Right now, let's roll that intro. As always, welcome back to Moneyside, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications so you don't miss out on our daily crypto news updates. Now, getting back to today's topic, let's actually explore what is happening here. As we mentioned earlier, the EU regulators have warned people to be ready to lose all their money in crypto. Well, it's about time. This is not something we are mentioning here for the first time. Brad Garlinghouse has repeatedly said that 99% of cryptocurrencies will probably go to zero. In a joint statement issued yesterday, European Union's securities, banking, and insurance watchdogs said consumers risk losing all their money invested in crypto assets and could potentially fall prey to scams. This will not happen overnight, but as soon as regulations start coming after Bitcoin and other digital currencies, there will be massive bloodshed in the crypto markets, but that's until we have clarity and regulations in place in the crypto space. Regulators are increasingly worried that more consumers are buying 17,000 different crypto assets, including Bitcoin and Ether, which account for 60% of the market, without being fully aware of the risks. The regulators have urged consumers to be alert to the risks of misleading advertisements, including via social media and influencers. Notably, they should be wary of promised fast and high returns, especially deals that look too good to be true. In addition, they mentioned that consumers should also be aware that energy consumption for producing some of these crypto assets is pretty high, as well as impacting the environment. There are currently too many crypto assets, and there's been a lot of unnecessary hype in the crypto ecosystem. Not many of these crypto startups will survive what's about to come. Historically, anytime there's a new market that promises to solve a problem and deliver customer needs, many people run into these markets. The only digital assets likely to survive after this are the ones that are focused on solving real problems for the customers, and that will be the remaining 1%. Far from all that, we have a pretty exciting tweet here. It comes from Chesty Puller's Ghost. He tweeted saying CBDCs will be bridged by XRP. The E1, a CBDC, is already backed by gold. With Basel III, central banks are required to have a physical gold on hand to provide liquidity. Further, he shares a document that says, still, there are 3 huge changes that could emerge from the Great Reset. The first is that a new global currency regime would be an opportunity to devalue all major currencies in order to promote inflation and steal wealth from savers. Well, now we know why most of these countries are hoarding gold like never before. So what are the chances that this could actually happen? I'd say the chances are pretty high that CBDCs will be bridged by XRP, as this is the only currency that will have received clarity. And of course, it's a pretty neutral one. Moving forward, we have some more exciting news. G the Gray Fox on Twitter shared an article from CoinGate.com that talks about how the PayPal CEO believes crypto and blockchain will reform the financial system. Schulman shared his insight on the future potential of blockchain and cryptocurrencies in the futuristic financial system. It's interesting how he believes that the real potential of digital currencies lies in the payments and not buying and selling and predicting their price action. Let's look at something else he shared by Cointelegraph. Members of Congress from both sides of the political spectrum have called out Gary Gensler and the SEC's tactics in the cracking down on crypto firms in the U.S. We even have proof from J.W. Verrett on Twitter, who says, "Upon my term ending on the SEC's advisory committee last week, I took the chance to give Chair Gensler some strong words about his abuse of digital assets. Check out Gensler's response. If we listen to that video shared along with his tweet, we can see that he shared with the SEC a digital asset regulation Genesis block proposal is my first effort. It merely calls on the SEC to open public comment on the unique issues that digital assets face. Verret wants to join in the fight for digital assets freedom that many folks have been fighting for a long time now. This is the sentiment of those who have been in this space for a while. Taking Verret's approach would benefit the market participants and the creators and innovators of this tech. There are problems in the space, but many have taken steps to make things safer and more trustworthy. Based on Gary Gensler's response, something else that's out right here is that he really needs to step down. From where we all stand, Gensler has done nothing but protect his special interests and his buddies. All he has done is hurt and derail American innovation. Don't you think it's crazy how now even ex-SEC members are coming after them? This just goes to show that they know all about the dirt that has been covered up by the SEC behind those closed doors. A little graph looking at this is 95% of traders fail. Why is that? In this post, we discuss the trader's road to success and why most of the traders give up at the halfway point. On the chart, I was trying to portray the journey of a trader. Most of the traders start this game with gambling. They randomly buy and sell the market relying on their intuition and with a high degree of probability and end up with a nice cush. However, as they proceed, they realize that the profits that they made were the product of luck, not skill. The more they trade, the less they win. At some moment, losing trades start to outperform winners. Trying different things, jumping from one strategy to another, one comes to the conclusion that nothing seems to work. He goes broke. He's panicking. At that stage, the majority blame the market for their failure. Forex, stocks, gold trading is a complete scam. Making profits on the market is not possible. They give up and they leave. Only 5% are persistent. Only 5% are blaming themselves and not the market for their failure. They start following a strict trading plan. They follow risk management recommendations of professional traders. And at some moment, they start making zero, buying and selling the market. At the end of the day, they don't lose anymore. That is the most important milestone in a trader's journey. Realizing that the one stopped losing, a trader starts polishing and improving his rules in order to achieve better results. He trains and works with his psyche. After years of struggling, one finally contemplates a consistent account growth. He became a pro trader. I wish you all to be persistent traders and don't give up. Patience pay. And at the end of the day, winners win. As always, guys, do your own research and always trade safely. And we continue to pray for the people of Ukraine. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. Tell us what you think in the comment section below, and let's have a conversation. Thank you as always for watching. Don't forget to like this video, and please click on that subscribe button below. And be sure and turn on notifications. That way you get informed whenever we post our amazing content. Thanks again, and we will see you on the next Money Side.